Welcome to the Stock Market Daily News Podcast. It's Monday, December 15th, and I'm here to get you up to speed on everything that moved the markets on Friday and what to watch this week. U.S. stocks took a breather after a hot run. S&P 500 dropped around 1%. The Dow Jones slipped just under 1%, and the Nasdaq led the decline, falling nearly 1.7% as investors stepped back from tech giants. But is this the start of a bigger shift or just a pause? That's our top story today. We'll dig into Wall Street's new sector rotation, catch up on a wave of penny stock rallies, look at a surprising ETF income trend, tap into crypto equities, and see how Indian benchmark indices closed the week. First up, Wall Street is signaling a major rotation away from big tech and toward old-school sectors like healthcare, industrials, and energy. For years, the Magnificent Seven, think Nvidia and Amazon, drove market gains with skyrocketing profits and AI booms. Now, analysts at Bank of America and Morgan Stanley say those lofty tech valuations might finally be peaking. Since November 20th, the small-cap Russell 2000 index has surged 11%, compared to just 5% gains for the big tech group. The S&P 500 equal weight index is outperforming its standard cap-weighted counterpart, hinting that broadening market participation could soon become the norm. For investors, this means opportunities may be shifting to lagging sectors and smaller companies as the economic outlook brightens for 2026. Shifting to high-growth outliers, penny stocks in India made waves this fiscal year. 10 microcaps soared between 25 and over 500%, with standouts like Blue God Entertainment skyrocketing over 5 times in value. 6 of these turned into true multi-baggers. But remember, penny stock rallies are high risk, high reward. Low liquidity and limited transparency make research and risk management absolutely critical. For income-focused investors, the Illyrian MLP ETF, ticker MLP, caught attention with an 8.3% dividend yield, almost double what most traditional funds pay. This ETF holds master limited partnerships in vital energy infrastructure like pipelines and storage. Its largest holding, MVLEX, just bumped its payout by 12%. While the fund fell nearly 4% in price this past year, its strong dividend more than offset losses, delivering positive total returns. For those seeking stable income during market uncertainty, high-yield MLP ETFs remain a popular play, but always keep your eye on fee structures and underlying asset stability. In the crypto equity space, the debut of 21 Capital on the NYSE was a cautionary tale. The stock dropped nearly 20% on day one, despite being one of the most heavily backed Bitcoin holding companies in the public market. Shares traded almost exactly at the value of the Bitcoin on its books, meaning investors assigned little premium for its business model. This shows growing skepticism. Big crypto asset treasuries are no longer enough. Equity investors want proven, revenue-generating operations on top of big balance sheets. Finally, over in Asia, Indian equity benchmarks ended the week slightly lower despite bullish sentiment after a U.S. Fed rate cut. The Sensex closed at 85,267 and the Nifty at 26,046, both down less than 0.5% for the week, although autos and metals led gains. Most active stocks included Vodafone Idea and Hindustan Zinc, as the rupee hit new lows and investors weighed global trade tensions. To recap, U.S. indexes closed the week in the red, with the S&P 500 at 6,827, the Dow at 38,986, and the Nasdaq at 23,195. The big trend is investors rotating out of tech and searching for new opportunities in undervalued or income-producing sectors. Keep an eye this week on earnings reports, more central bank signals, and ongoing sector rotations. Don't miss tomorrow's episode for the latest market action and news you can use. Subscribe now and follow us for more daily market updates.